This is Palak Jaswani from Mayur Kothari and Company. And in this video, we'll be discussing about what is greenwashing and what are the regulatory provisions with respect to the greenwashing. You might have come across any product which says the word sustainable or green or the packaging look recycled. Then you have been a victim of greenwashing. Now, what is greenwashing here? Greenwashing means spending resources for making advertising to appear more green than actually investing in environmental some type of activities which is good for environment. So basically, it's a type of branding yourself as green without doing any actual good for the environment. This was a term which was first came into picture in the year 1986 by an environmentalist on the basis of practices followed by the hotel industries at that time. Let's say, for example, that there is an entity which says that they're going to reduce the carbon emissions by reducing the use of fossil fuels in their production or manufacturing. However, while obtaining such plant-based oils, they are creating deforestation, which is in turn bad for the environment. This is greenwashing here. Now, how this greenwashing is done? One such example is cherry picking of data, which means selective data disclosure so that to give a positive picture of a product or an advertising claim. Another one such example is making false claim regarding any product or services. Also, making exaggerations about any product. Let's say, for example, a car which says that it will reduce to 40% carbon emissions. However, later it was came to know that the reports were forged. Then this is what is called as Volkswagen emissions scandal. Another example is when such terms such as green, eco-friendly, or sustainable, or some type of green pictures or imageries are used, then it is also a type of greenwashing. Next is why companies do greenwashing. What is the motivation to engage in greenwashing? As the global economies are moving towards a greater sustainability need, companies are also required to make contribution towards the same. Several regulators across other countries have put a disclosure requirement of ESG reporting on the companies. Also, now that we know that many of the investors or the customers are more inclined towards the eco-friendly product, any company with a proper profit motive would want to tap into such customer base. Now, one thing to be noted here is that when we say greenwashing, is it always intentional? No. Because of lack of understanding, lack of proper resources, and sometimes because of negligence of the company, they may become part of greenwashing. Now, why greenwashing is a concern? So, as we know that any investor or any customer who is buying a product thinking that this product is good towards the environment, when they come to know that this is a lie, they may lose their interest in such type of products. Same goes for investors as well. An investor thinking that I am putting my money into such companies who are ethical or who are environment friendly or who are doing something towards the environment. And later, when they came to know that everything was a lie, they may lose their money as well as their trust in such companies. Therefore, such claims are also bad for the reputation of the companies as well. Also, sometimes there might be a concept of green blushing involved here. Now, what does this mean? Sometimes companies which have a genuine products which are good for the environment but they'll not want to come forward with their products because of the fears that they'll get greenwashing claims on them. Now, when we say greenwashing, so are there any regulatory initiatives for that? Yes. Several countries such as USA, Australia, UK, you have their own set of regulatory perspective to curb the greenwashing. Similarly, in India also, there is a Consumer Protection Act, Environment Protection Act, a code given by the Advertising Standard Council of India towards curbing the greenwashing. There is also a concept of eco mark available. That means Indian standard for environmental labels and declarations have provided a concept of eco mark, wherein certain products bearing a specific tag of eco mark would be considered as a genuine product. Now, very briefly, we'll see this new guidelines which came this year called the CCPA Guidelines. So under Consumer Protection Act, the Central Consumer Protection Authority introduced these guidelines to curb the greenwashing. Now, what these guidelines say that any environmental claims which are made has to adhere to these type of guidelines, which provides that you have to make appropriate disclosure regarding any claims. There should be verification of third party, independent third party. You should use simple language while you are making any claims. There should be accurate data disclosed in the public domain. There should not be any cherry picking. Now, one very important thing to be noted here is that these guidelines also provide for penal measures. So any contravention of these guidelines will attract penalty as per Consumer Protection Act. Now that we have discussed what is greenwashing and what are the regulatory initiatives done with respect to goods and services, we'll move on to the very important topic, which is greenwashing or green labeling of funding instruments. So as India is moving towards its net zero target by 2070, sustainable green finance here plays a very significant role. Right from the first issuance of Yes Bank in 2015 to the recent 2023 green sovereign bonds issuance in India, India has seen its own journey. However, it is still in a very early stage. So, is there any greenwashing concern? As of now, no. But since the investor base or such issuances are growing in India, particularly in green finance, there is a need for regulatory intervention at this point of time. Therefore, some of the regulatory provisions which have came recently in India, we'll be discussing here. First is Greenwashing Circular by SEBI for green debt securities. So the concept of green debt security is although very old, but this circular by SEBI came recently, which with the name of do's and don'ts of greenwashing. So SEBI in the CPA of such greenwashing mentioned that the problem with respect to green securities has always been that when what is to be considered as green, and this lack of clarity would always result in greenwashing concerns. So with this circular, SEBI has put some requirements on issuers to follow, which says that the issuers of green debt securities has to continuously monitor the impact which they desire to achieve and whatever is disclosed in the offer document. Then there is a prohibition on utilization of proceeds, which says that whatever proceeds are being used should be used on such activities which are covered under the scope of green debt securities as per this circular and the framework. Then there is a prohibition on misleading data, cherry picking of data, making false claims, or any such type of impression which gives that this type of securities have third party certification when it actually does not have such. Next such initiatives is RBI Framework for Acceptance of Green Deposits. So this framework also defines the term greenwashing as well as what banks should do while accepting the green deposits. So it states that banks should have a board approved policy as well as a board approved financing framework, which provides as to how the eligible projects in which funding is to be done is to be selected. What is the evaluation project? What will be the evaluation criteria? How the allocation will be made? What would be the monitoring? How disclosure and reporting would be made? Along with that, it also provides for impact assessment report of end-use funds as well as the third-party verification. Another such initiative was when SEBI came up for regularizing the ESG fund. So it was SEBI mentioned that 65% of the AUM of such funds should be invested towards the BRSR core companies. So several researchers have indicated that in order to track the greenwashing, ESG ratings is compared with what the performance target company has disclosed in its relevant disclosures. So for this, there is a requirement to regulate the ESG funds as well as ESG rating providers as well. Moving on to the global initiative. So there was a report of EU in 2023 stating that there was a sharp increase from 40 cases in 2018 to 206 cases in 2022, out of which more than 23% of such cases were with respect to the finance market of EU. So far, EU has been the most active country to come up with such type of regulations or initiatives which curbs greenwashing. One such is Sustainable Finance Disclosure Regulation. This regulation is applicable to all financial market participants who are participating in EU, which requires them to make disclosure basis the type of funds they have. So there are three types of funds there: Article 6, light green and dark green, basis what type of investment objective they have, and they have to make certain disclosures on website as well as on other documents. Other one is regarding CSRD, that is Corporate Sustainability Reporting Directive. So very similar to the concept of which we have in India called BRSR reporting. So this directive also requires company to make reporting on their sustainability, climate change, pollution, human resource, value chain partners, all such things are required to be disclosed in this report. Another thing is EU taxonomy, which is a very prominent one. So this taxonomy provides a criteria as to which activity would be considered as green or environmentally sustainable. This actually helps companies to make disclosures in a very defined manner. Similarly, US has a sustainability disclosure requirement SDR, which provides a green anti-greenwashing rule. What this rule states that any claims which you make in any document, any public disclosure, or any marketing claim, that should be clear, fair, and not misleading. Then there is a task force called Climate and ESG Task Force in US, which is set up to take enforcement action for any ESG related misconduct. Similarly, in UK, SEC rules called name rules has been recently changed and updated to include ESG related funds in that. So it states that any investment funds name should match with the 80% of their portfolio. Now that we have discussed the regulatory initiatives with respect to greenwashing in financing instruments for India as well as the other countries, what are the key takeaways? So as we discussed earlier as well, let's say for example, in GSS bond, there is a lot of foreign concentration. And the recent example of Tata Clean Tech, where the International Finance Corporation invested a huge amount in the green debt securities in India. So we have seen that there is a very huge investor foreign concentration in green finance in India. One thing to note here is that whether the Indian regulatory initiatives with respect to greenwashing, are they at par with what the other countries have? So what are the key takeaways which we can take from such type of regulations of other countries? One such is green taxonomy. So as we discussed the EU taxonomy earlier, such taxonomy is also there in India, which may provide a definition of what is green or what is sustainable, which can be used across all type of instrument across the market. Another one is the concept of eco-label. So EU has a concept of eco-label of financial products, which provides retail investor an extra comfort that a third-party person, a third-party external agency has verified the authenticity of this product in which they are investing. So similar such concept is also there in India called Eco-Mark, which we discussed earlier as well. However, that is with respect to only generic products and services. So one such concept can also be implemented in case of funding instruments as well. Next, and the most important, is the third-party verification. So while we were discussing the regulatory initiative, you must have noticed that every other country has their own set of disclosure requirements. When it comes to greenwashing, it's not always about awareness. Sometimes there has to be transparency as well. Therefore, several countries track what companies are doing through the disclosure requirements. However, only disclosure requirement would not suffice here. Then comes the concept of third-party verification. So this verification would give an extra comfort to regulators and investors and ensure that whatever details have been disclosed in the public domain by the companies, those are true and not misleading. So it's very similar to like a maker-checker concept, that whatever is given in public domain has been checked by an independent third person, which is not related to the company. So that's all for today from my side. Thank you so much.